So guys, let's look at this chart example among many others that we're still going to look at. So you can see here we have the market change in character, because you can see the market has been falling to the downside. So we have a change in market character over here. So now, first thing you need to do when you're trying to trade off the order block, you must actually look out for the change in market character, the break in market structure, look out for the inducement zone, look out for liquidities. And hey guys, welcome to the Nexoel Trading Hub YouTube channel. In this video, we are going to be looking at the single candle order block trading concept. So guys, let's head to the chart so you can understand how to identify a valid single order block and how to trade off from the single candle order block. So guys, you can see here from the chart, we actually have a bearish market move to the downside. We have price push to the downside. We have this pullback created this swing high points, and then price further push to the downside and swept this low points. But we can see the return rated this high point. So meaning we have this high point as our inducement swing high. So price actually cleared the inducement swing high. We can see that price swept the high of the inducements with this particular candle wick. So you can see this candle wick actually swept this high point. So you can see we have the sweep of the inducement, and then you can also see that we have this candlestick also swept this candle's high points here. So we can see that price actually also swept the candle's high points here. So you can now see possibly what we have is that price is mitigating a higher time frame point of interest here. So this candle actually mitigated the higher time frame point of interest. Price returning, price swept the inducement, and you can also see that price swept the previous high of the other previous candle. And you can also see price swept the high of the previous candlestick. So what you can now see is that now you'll see the next bearish candle actually now closed below the low of the previous candle that mitigated the higher time frame point of interest. So for you to actually validate a single candle order block, you must wait for price to actually close below the low of the week, depending on the market condition. If you're in a bullish market condition, then you wait for the market to close above the week of the previous candle. But you can see we're actually in a bearish market condition. Price mitigated the higher time frame point of interest, took out the inducement zone. And then you can also see that this candlestick also swept the high of the previous candle, took out the liquidity of the previous candle. And then you see price move to the downside and then closed below this week low. So you can see we have now our single candle order block once price mitigates the higher time frame point of interest. So you would see price mitigated the higher time frame point of interest. And then you see we have the fall to the downside, and then price broke the week low of the candle that actually mitigated the higher time frame point of interest. So now it is trying to show us the momentum of the market, that the sellers are now trying to push the market to the downside. So what we are now going to be expecting, we can take entry from just this particular single candle order block. So meaning we can take our entry at the very close of the order block, the week of the order block, and then we want to see price push further to the downside. So we are going to be waiting for the mitigation of the order block, and then we see price push to the downside. So this is how you want to consider the single candlestick order block. So I'm going to show us another example on how to actually mark out a valid single candlestick order block. So let me show you another chart example so that you can understand how to spot out the valid single candle order block. Now you can see also from this example, you can see the structure of our market is actually bearish, price pushing to the downside. Now you can see price actually sweeps the inducement level, the swing high here. But what we have is actually, you would see that the candle actually closed above the inducement's high points. So you can see we have this candlestick closing above the swing high points. So basically, this can be considered actually as a change in market character, because you can see the candle actually closed above the inducement high points. But then we have our point of interest actually above here. So that really is not a valid change in market character, because now you can also see that this candle body actually closed above the inducement. But what then you can see next is that the candle that mitigated the higher time frame point of interest did not close above this candle's weak high. We have price also sweep the liquidity of this candle that actually broke through the inducement level. You can see the candle closed below the high point of this candle, mitigate the higher time frame point of interest. So what you're going to anticipate is for the next candle formation to actually close below this candle's weak low points to actually validate you marking out the single candlestick order block. Now you can see that the candle color does not really matter. You can see here we actually have a bullish colored candle to the upside that took out this inducement, mitigates the higher time frame point of interest. But here you can see we actually have a bearish colored candle that mitigates the higher time frame point of interest, took out the high of the previous candle, but closed below the candle's high. So now we can see that now price fell further to the downside and then closed below the low of the candle that mitigates the higher time frame point of interest. So you can now see that you have your valid single candlestick order block here. So what you're now expecting is to actually see the return of price to come mitigate the candlestick, and then price falls to actually take out this low points. So this is also another example of the single candle order block. I'm going to now show us another theoretical example on how to actually identify a valid single candle order block. And then we are going to look at a real-time chart example on how to mark out this ideal single candlestick order block and how to trade of them. Hey guys, if you're actually new to this YouTube channel, you can kindly click on the subscribe button. Also like and share this video to friends and families who are also interested in trading the financial markets. So guys, in this other example, we can also see that we actually have price swept the inducement level, price took out liquidity to the upside, and then you can also now see that this candle also swept the high of this previous candle, also took out the liquidity of this previous candle. So we have price mitigating a higher time frame point of interest over here. So you can see what we have is price pushed to the downside, but then you would see that this candle did not close below the low of this particular candlestick. You can see that the candle body did not close below the low of the candlestick that took out liquidity and then took out inducements. So you can see that this candle body did not close below this candle. So this is not yet a valid single candlestick order block. So what you're going to wait for is to see price create a next candle. If that candle closes below the low of this candle, then you actually have a valid single candle order block. You can see it perfectly well in this example. You can see that price took out the inducements, price took out liquidity of this previous swing high, and then you can also see that price took out the high of the previous candlestick. We have a mitigation of a higher time frame point of interest. So you would see that now price here did not close below the wick of the candle that mitigated the point of interest. So you see now we wait for the creation of this candle, and then you can see that now this candle closed below the previous candlestick low. So we have a transfer of our order block from this particular candlestick to now this candlestick resting here. So we have our transfer of single candle order block to this particular candlestick. So what you're now going to expect is to see the return of price to mitigate, and then price push to the downside to sweep this low point that took out the inducements and led to the move that mitigated the higher time frame point of interest. So this is actually nothing but just a theoretical example on how to identify the single candle order block. So I'm going to actually show you guys real-time chart examples on how to actually identify the single candle order block and trade off them. So guys, let's look at this chart example among many others that we're still going to look at. So you can see here we have the market change in character, because you can see the markets has been falling to the downside. So we have a change in market character over here. So now, first thing you need to do when you're trying to trade off the order block, you must actually look out for the change in market character, the break in market structure, look out for the inducement zone, look out for liquidities. And you must understand that order flow is the primary and then order block follows. So now you can see we have the change in market character over here. Now you see price givers are inducements, and then you would see below the inducement, we have this as a decisional point of interest, this order flow here, unmitigated. And then we also have this extreme point of interest, which is also another order flow unmitigated. So you can see, some may see, but this candle actually reacted after the break of this. No, this candle is still within this other candlestick here. So you can also see this particular one too over here. So we have this order flow unmitigated. So now you would see that now price actually swept the inducement. So there are scenarios, cases where price will only sweep the inducement and then push without reaching the decisional point of interest or the extreme point of interest. But in the case where price actually just sweeps the inducement, you can just possibly target a sponsorship zone, a demand zone, or a supply zone, depending on the market condition, because price has the tendency of reacting at that demand or supply and then going back to the decisional point of interest or the extreme point of interest. So now you can see in this particular market condition that the market actually swept the inducement, and then you can see price created the single candle order block. Yeah. So you can see this candle swept this swing low, and also you can see this candle swept the most lowest bearish candles week low here. And then now what you're going to see is that price closed above this particular candle here. So the moment we see this bullish candle closes above this bearish candle, we can now execute our trade by placing our entry at the order block and then the stop loss below the order block, and then we can possibly target this demand zone here. But then what you can see in this particular condition is that the market actually did not push sufficiently to the upside. So you'd see that now price fell back to the downside to mitigate this decisional point of interest. Now, when price mitigated the decisional point of interest, you can see we have the sweep of this lowest candle, lowest bearish candle's low here. And then now what you would see is that price created the next candle, but then this candle did not close above this candle that swept this low points. So you have to wait for the creation of the next candle. And then this candle was formed, and then it closed above the candle that swept the previous low of the bearish candle and also mitigated the decisional point of interest. So you can now see, you can take your entry at this particular close of this candle or the high of the candle, your stop loss below, and then you also target this demand zone, or you target the swing high points here, since actually we are taking the entry from the decisional point of interest order flow. So you can see in this case that the market did not push also sufficiently to the upside to come break this high point. So you must understand that trading is a game of probability. So you have to trade with multiple confidences to establish a convincing directional bias. So you can now see that now in this particular trade also, the market did not move sufficiently. And also you can see that there wasn't a return to mitigate the order block and then the push to the upside. The return came raided through the order block, and then price went straight to the extreme points of interest. So which is also an order flow zone. The last sell move before the buy move to the upside that created a change in market's character. So you can see I'm showing you that these things also have the possibility of failing. I'm not cherry picking this chart example to teach you. I'm showing you what works and also how it may not also possibly work. So you can now see price mitigated the IOF zone. And now what you can see is that now price gave us this candle. This candle swept the low of the previous candle here. And now you would see that now we have a push of price to the upside. But then the next candle, but it did not close above the wick of this candle. And also you would now see that the next candle was now formed. After this candle was formed, which did not close above the weak high of this candle that took out liquidity and mitigated the institutional order flow of the extra point of interest. So you can now see that now price closed above this weak high here. So you can now see that we now have our ideal order block resting here. So we have our ideal single candle order block, and so we can mark out our single candle order block, which is now this particular candlestick, because what you're going to see is that price mitigated our order flow zone, and then you can see that this candle came to the downside, mitigated the wick of the candle that swept this low, and also mitigated the order flow zone, which is actually our extreme point of interest. So now we can actually now fix our entry at the high of the single candle order block, our stop loss below this week low. And then since this is our extreme point of interest, now we can now target the high points here. So now you can see that price return mitigated the order block, and now you can see we have the push of price to the upside. And then now what you're going to see, we have a break in market structure over here. This is the pullback before the break in market structure, meaning we have our inducements here. So price return took out the inducements. But you can see we do not just have the sweep of inducements. Price broke through the inducements. Now you can see that now price return into this inefficiency. Yeah. Price return into this inefficiency. Actually, I won't really take any form of trade in this particular zone. So, but what you're going to see is that now from this particular price reaction here, we do not have a push to the upside to sweep this high. Price return to the downside. You also can see that this candle did not push to the upside to sweep this high. What you can now see is that price swept this low points here, and then price created this candle that closed above this candle's weak low. Price closed above it because this is the last selling move before the buy move. So this price took out the low of this sell move before the buy move, and then price closed above it. But you can now see that we cannot really take an entry because this candle here, we have to wait for the next candle to be created. And now you can see this candle now closed above the high of this candle that took out this low points. So you can take your entry from this candle and then project to sweep this high points. What you can see is that price did not even return to this level. So there are times price may just take off without returning to mitigate the single candle order block. So you can now see that now price project broke structure to the upside. Now we have our inducement, price return took out the inducements. So now what you would see here is that we have the break of the inducements. Okay, I think I need to reposition this. So now you can see price took out now the inducements here. So price took out the inducement with a body candle closed below the weak low of this inducement zone. So meaning we have a break of that inducement level. But then what we are going to see is that now we have to wait for the creation of the next candle. If we are going to have movement to the downside, further movement to the downside, we see price push to the upside, but did not close above this candle. Then price also pushed again further to the upside. This candle did not close above this candle. Now you have this candle closing above this candle, and also this candle. So you can see we have our single candle order block resting here. So with this particular one, we can take entry from the high of the order block and then our stop loss below, and then we project to see price sweep the high points here. And now you can now see that in this particular case here, price return into the order block zone here, where you can see price raided the stop loss, and then before price now took off to the upside. So this is how you want to look at for the single candlestick order block. I will show you guys furthermore examples on how to really identify the single candlestick order block and how to actually execute trade from them. I'm going to show you guys a replay of charts where we are going to switch from a higher time frame to a lower time frame. So see you guys in the part 2 of this particular topic the single candle order block. Cheers, guys, and God bless you.